1st, 2023, I took a trade and I'll be providing commentary on it. I have screenshots of before and after the trade on my Discord. The entry criteria involved entering from the fair value gap, which price was retraced into and formed an order block, and my target was the highs and the fair value gap that was formed here. Initially, the trade provided me with some profits, however, came back and dropped into this fair value gap. This gave me the opportunity to enter onto another trade using this fair value gap and this order block that was formed. Always begin our analysis on the 4-hour chart. We've created a higher high in comparison to this high, and we've created a high low in comparison to this low. On the high low and the high high, these areas, they have long-term liquidity that resides on them. Due to day traders' time scale, price will often take a considerable time to reach these levels. Market has traded above this short-term liquidity, forming a fair value gap along the way, then consolidated for a period of time, and this is demonstrated by this gray area. Then it traded below the consolidation area on Friday morning. This is what I would have seen during the Friday morning, and this is price now during this commentary. The 1 hour time frame. This bold line delineates the start of the week, and the vertical lines show the separation of days from 12 o'clock New York time to the next day 12 o'clock New York time. Price has traded in the range of Wednesday high and Wednesday low during Thursday, and this is demonstrated by this gray area. Price then swiftly dropped from the Friday open price and started targeting the Thursday, the Wednesday, the Tuesday, and the Monday Asian session low. And Monday low has provided support for price, and most likely you will find a fair value gap, an order block within this Monday low. When liquidity is taken from all these lows, price would gravitate towards the session daily highs and session daily lows. See, you have taken all those liquidities, and it will just gravitate towards the highs of the day or the Asian session high. Time frame for me to identify session highs and lows where liquidity resides is the 15-minute. As you can see, not only we tapped into the Monday Asian session lows, but we also went below the London and New York kill zone lows. This red line delineates where we entered the trade from. Also, we missed this trade on when the liquidity above this high got swept and we tapped into this fair value gap and this order block. We got the chance to enter the sell that we missed. This is what it would have looked like. The stop loss above this order block, and then the take profit would be towards the London plus New York kill zone lows. So that's a trade that we potentially could have taken, but we have missed it. Also, one thing you have to learn is, or you have to know is, once we take out major areas of liquidity in the market, we will often aim to move into opposing liquidity. So the New York kill zone high was created and the New York kill zone low was taken out. So when market trades back up, you'll be anticipating the movement above the New York kill zone highs and even the London kill zone highs, because the London kill zone lows got swept along with it. And now we have dropped down into the 5-minute time frame where we formed a Judas swing that targeted these London and New York kill zone lows and tapped into the Monday Asian session lows. So you might be wondering, why did I draw the Judas swing from here and not from down here? This is because on the lower time frames, the last amount of retracement prior to us targeting these lows was formed there. Structure wise, our higher low or our lower high on the 5-minute is formed here, and as market traded up past that level, that confirmed a break of structure. We look into the left and we find these 3 consecutive down close candles that form our bearish order block. The start of the order block, or the opening price of the order block, is drawn across here, and we have formed a fair value gap in between. So that's all I wanted market to trade down to, because below here there's no fair value gap, so price doesn't have to return all the way down here. So we can take our trade from here and put our stop loss below these lows, the 1-minute time frame. And if price is clear, I often use the 3-minute time frame to take my trades on. If not, then I use the 1-minute. And for this case, the 1-minute was much clearer than the 3-minute, so I used the 1-minute. The break of structure occurs on this high, and as you can see, price doesn't really have to retrace down to these fair value gaps because our order block was formed from this high to this low. Price traded above and created this high. Once it created this high, it traded down to fill in this fair value gap and then traded above it. Our break of 5-minute structure, which I was waiting for, occurred on this high. Once that high occurred, we wait for trade to come down to our level and we take the trade from it. However, we entered this trade quite early and price came down to fill in more fair value gaps below here. This gave us the opportunity to enter another trade into this fair value gap and this order block that was formed, and we were targeting this high specifically and also this fair value gap. We stopped the trade, we closed the trades on these levels. However, price decided to go above and take out the New York kill zone high and also the London kill zone high, which is above. As you can see, we've drawn these pink boxes to illustrate where price has created all these fair value gaps and these order blocks to support price higher. And we've closed here at around 124, and the other one was around 1242. However, we would have not closed the trades, we would be on close to 1-13, which is absurd. And the other one, I think it would have been slightly higher at 1-15 or something. But I emphasize more on actually executing your trades with proper risk management, because you're always not going to be achieving those high risk to reward trades. If the market gives you 1-2 or 1-3, you have to take it. You can't be over welcoming your stay, because market could easily just take out the New York highs and then start trading lower and lower. But at this case, it didn't decide to do that. It decided to go higher.